Hi team, Uwe Jacobs, property strategist from PropertyFriends. I trust everybody's well. Well, I wanted to bring you the PropertyFriends Musings, the update for the month of October, presented in November. Well, I've got to say, I love it when a good deal comes together. I love it when a good plan comes together. You see, 3 years ago, we decided to invest into the area of Hobart. A lot of research went into that, and our research has proven to be right. Now, 3 years later, our house and land packages are more than 25% up in value in capital gains, and the rental yield is in excess of 7%. So whilst the general statement is time in the market is more important than timing the market, it's nice when you can get to the upswing in the market. Now, there's a great opportunity out there at the moment. There is an upswing happening in a number of specialized areas. I'll give you some figures. Vacancy rate of 0.4%. Asking price at the moment of, say, 495, it has gone up in the last quarter by in excess of 10%. Now, that's the asking, not the median. The median is, of course, lagging. But the stock on the market is 10%, is at a 10-year low. The weekly rent has gone up and is continued to going up for the last quarter by 11.3%. Now, does that sound to you like an upswing? It sure as hell does to me. Now, put on top of that the development of a major shopping center in the area with Woolworths as the anchor tenant, the duplication of the highway and extension of the highway to the tune of $250 million, and a large retirement village is going to be built in the area. Now, that certainly spells like a similar situation in Hobart 3 years ago. It spells capital gains, and all the while we're going to be sitting at above 5% rental yield. Now, that, as I have said many, many times, is very important to us because we want a balance between rental yield and income, between income and capital growth. What we don't want is one to have to feed the dragon, which is what I call it, the negative gearing, to the tune of $500 or $1,000 a month. That simply doesn't work when you want to build up a property portfolio. So, balance between rental yield and growth is important. And if you can get into an upswing, by all means, that is the nirvana. That is the best way. Because you're setting yourself up for an immediate uplift in value. Now, if you then can do refined strategies like duplexes or things like that, Bob's your uncle, that's fun. All right, in regards to the RBA Cash Rate Decision, well, 75% of the so-called expert had forecasted a reduction to 0%. Now, it doesn't make sense to me. I'm sorry, I'm a simple bloke. I can't see an increase in the benchmark rate, in the cash rate, for at least another 8 to 12 months. But the experts are the experts. Well, they were wrong. Again, the RBA cash rate did not move. It still is sitting at 0.1%. So all in all, a great basis for us property investors, but you got to be in it to win it. So remember, you can book a pre-discovery call. Just go to our website and we can have a chat. Other than that, stay safe, have fun, and be good. Bye-bye.